In our lesson today, we will be covering business operations. A business operates through the utilization of its assets with an aim of offering goods and services to its customers. When a business offers goods and services to customers worth more than the asset they have utilized, we say that business has made a profit. The quality, measure, or value of a business operation is the difference between the value of the goods and services offered to the customer and the assets consumed in order to offer this value. This means a business operation contributes or generates more value to the business and is therefore a value contributor. Using our previous example of a business of selling boiled eggs in the streets of Nairobi, Yule Jamwa Mayai, where the business now has assets worth 23,000 Kenya shillings. Trolley, 20,000 Kenya shillings. 2 egg trays, 900 Kenya shillings. Charcoal and other consumables, 2,100 Kenya shillings. Bring the total assets to 23,000 Kenya shillings. For this business, operations will include utilizing some charcoal and some consumables to boil the 60 eggs, utilizing some consumables to prepare pickles aka kachumbari, deciding where to best place your trolley to maximize sales, waiting and serving boiled eggs to customers, collection of cash after sales. Operational financials after selling all the 60 boiled eggs. Sales, 60 boiled eggs at 25 shillings brings Kenya shillings 1,500. Assets consumed to make these sales. Raw eggs at 15 shillings, 900 shillings. Charcoal and other consumables were worth 200 shillings. Total assets consumed comes to 1,100 shillings. Net asset increase is 400 shillings. Note: sales increased our cash assets by 1,500 shillings. To sell the 60 boiled eggs, we consumed assets worth 1,100 shillings. This net increase in assets is the value of our operations, or profit. The above breakdown is the basis of a profit and loss report. This is how our business assets look like after selling the 60 boiled eggs. Trolley, 20,000 Kenya shillings. Eggs, 0 Kenya shillings. Charcoal and other consumables, 1,900 Kenya shillings. Cash in hand is now 1,500 Kenya shillings. This brings our total assets to 23,400 Kenya shillings. Note: eggs have now reduced from 900 shillings to 0. Charcoals and other consumables have reduced from 2,100 Kenya shillings to now 1,900 Kenya shillings. Our cash have increased from 0 to 1,500 Kenya shillings. Our record of contributed value after selling the 60 boiled eggs looks as follows. Capital contribution. Cash from our savings, 15,000 Kenya shillings. Operational contribution or profit, 400 shillings. Bring a total capital to 15,400 Kenya shillings. Liability contribution, loan, 8,000 Kenya shillings. Bring our total liabilities to 8,000 Kenya shillings. All this brings our contribution to 23,400 Kenya shillings. Therefore, after operations, our Basel equation remains true. Business value or assets is equal to value contribution, capital plus liability. As follows: assets worth 23,400 Kenya shillings is equal to capital worth 15,400 Kenya shillings plus liability of 8,000 Kenya shillings. In conclusion, business operations are carried out by capital contributors. Business operations are actions that involve utilization of assets with an aim of offering goods and services to customers. In accounting, this operation's value is expressed as profit. This finalizes our lesson on business operations. In our next lesson, we'll be defining what debit and credit is. Don't forget to subscribe, turn on your notification, and share. Accounting by Abok.